What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of what happened today on AMC's chart. We did get that Russell 1000 rebalancing move right at the end of the day with that addition of a little bit extra buying pressure. Now, in addition to this, we're also going to be going over a little bit of the technicals on the longer time frames, just like we always do. We do have to talk about the Ortex data, even though that new user interface is absolutely terrible. But the two main things that I really want to go over with you guys in this update is what the heck is going on with AMC's potential over 200% short interest. Now, I saw people running with this narrative again today. This does happen from time to time, and I want to go through this with you guys to make sure that you fully understand what the accurate information is on AMC at the given time. Now, in addition to this, we also have some newly released news about a probe into Robinhood's involvement into what was going on in January of 2021 with the AMC GameStop kind of mini squeezes, and just kind of seeing what their findings were. There's some interesting things in here, so make sure you guys stick until the end of the video so you guys can see that as well. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC today up 42 cents, up 3.5%, closing at $12.47. Now, we did see this nice little rebalancing move. Fun to see. Well, let's see if we see any other additional buying pressure coming in next week. We'll see how the market's doing and then kind of go from there. I wouldn't necessarily get your hopes up, but this is a pretty good sign of that move coming towards the end of the day. Now, coming over to the 4-hour chart on AMC, what we're seeing here is what honestly Gabe likes to call an EMA sandwich. This is not really a clear indication of any sort of move up or down at the current time. We're seeing all of these EMAs right here, specifically the 13 EMA and the 48 EMA, very, very tightly wound. We are seeing this MACD trying to flip. But again, in order to see that bullish momentum to the upside, well, we're going to need to see a lot of volume above the 200 EMA. And again, guys, if you do want to learn more about this strategy, get access to over 55 private live streams every single month, all of the curriculum learning videos, the real-time options data, and see the plays that we are making in those pre-market live streams that I'm running where we called out 200%, 700% gains on many, many days this week. Make sure you check out that link down below in the description. The price is going up at the end of the month, so if you do want to get grandfathered in, you have another week to go to stay and lock in the price that it's currently at. Now, when we come over to AMC's Ortex right here, they did change their interface a little bit, which I honestly hate this, but that's besides the point. So we have estimated short interest of 22.52%. But in the title and the thumbnail, we're talking about over 200% short interest. We're going to take a look at that in a second. We had a net borrow of shares today of about 201,000. Max cost to borrow, though, stepped up pretty significantly to about 49%. Average cost to borrow at about 25%, as we can see right here. Now, let's get into this situation with AMC's potential giant increase in short interest from MarketWatch. Now, when we move over here to MarketWatch, this is AMC Entertainment Holdings right here, making sure that we're looking at the correct thing. Market cap, $6.23 billion. But when we look here, percentage of the float shorted, oh my God, 216.95%. What the heck just happened here? Well, we have this short interest number at 109 million. Well, that seems to be in line. Well, we're seeing percentage of the float right here. Well, what do they have listed as the float? 50.62 million. That's not the float. The float is around 500 million right now. It seems that they've kind of taken off a decimal place here. So this is what we're looking at here, people. They messed up the float. The AMC is not reportedly shorted over 216% right now. So I want to make sure that is clear to everybody going into the end of this week and starting next week as well. I don't want to see this misinformation getting spread because, again, things like that tend to spread like wildfire in this community. And I don't want people making investment decisions off of poor information. So now we have to talk about this newly released information about Robinhood and their involvement in what happened not last January, but January of 2021. Coming over to this tweet right here from Walter Bloomberg, meme stock probe finds Robinhood woes were worse than it let on. Sorry. So when we come over and take a look at one of these articles that was actually released, Robinhood's depiction of liquidity during meme stock frenzy in question. Now, this article was released today. U.S. Congressional Committee probing last year's meme stock frenzy has questioned whether the testimony of Robinhood's chief executive describing the retail broker's liquidity position was at odds with the investigation's findings. The U.S. House Financial Services Committee on Friday released a 140-page report based on an 18-month investigation, so they have been investigating, into the market swings of January 2021, which retail traders drove up the price of previously little-loved stocks such as GameStop and AMC. In the report, the committee revealed internal communications that appeared to show a senior staff at Robinhood scrambling to avoid defaulting on its multi-billion dollar collateral obligations when a surge in trading led to sharp increases in demand for deposits at the clearing houses where trades in stocks and options are processed. Before markets open, we pretty much know what's going on here. The report said Robinhood was only saved from defaulting by a discretionary and unexplained waiver granted by the DTCC following discussions between the agency and the brokerage. That finding, the committee said, was at odds with the statement made by the company's executive leadership regarding the firm's liquidity. Remember, Vlad Tenev went on national television and said there was no liquidity issue. Obviously, we all know that's incorrect, but now this probe has also found that it's incorrect. The report provides fresh insight into a wild few weeks in markets that thrust Robinhood into the regulatory spotlight after individual traders organized an online message board such as Reddit collectively unleashed furious rallies on certain beleaguered meme stocks. This report is nothing new, once again confirming that January 2021 was an extraordinary once-in-a-generation event. Is it though? Robinhood said in a statement, "We remain confident that we took the appropriate and possible steps necessary to protect and support our customers." Nearly 900,000 individual accounts traded shares of GameStop in a single day at the height of the meme stock frenzy, a 90-fold increase from the start of the year, according to a report from the U.S. Securities and Exchange Commission. So that's kind of what we're looking at here, people. There's some more information a little bit down here, but again, this probe has now found that Vlad Tenev lied. This is not something that we hadn't known before, but it is very, very interesting to see that this U.S. Congressional Committee is finally coming out and basically bringing these things back into light because, one, these situations most likely are still not over. We are still seeing not a free and fair market. We are still seeing super high percentages of the trading activity going into off-exchange venues or dark pools. We are still sometimes seeing max pain pinning by market makers. And again, we are still seeing situations like we recently saw with Redbox where the buy button was essentially turned off of the options chain. So guys, these things are not over. And in my mind, there's kind of two fights going on with AMC and GME and what's going on. There's, yes, we want to make a bunch of money. There are multiple ways to do that in the market, which we have shown you guys. But for those of you guys that are just focused on AMC and GME, well, there's wanting to make money on those plays right there. And then there's kind of the side where we want to make the markets more fair. These types of things, these regulatory probes, do help further that cause. So this is something to, honestly, in my mind, not be excited about, but to be happy about that this congressional committee is finally bringing these things to light. So that is going to wrap up this update on AMC and this Robinhood situation that has come out. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.